All right, hi everyone. It's 2 o'clock, so let's get started. First of all, I want to thank everyone for joining. I know it's for some of you, it'll be a busy week with kids at home off on March break. I know I was in that boat yesterday. Thankfully, my wife is watching them today. I think we have an exciting webinar for you this week. A couple of the topics on, like the first one we're going to start off with is just a little bit of practice on some of the core concepts of how to import whole life. We're going to do this in the form of a whole life versus an overfunded UL, just as kind of an interesting case. But really the purpose is just kind of to really look at XLS importing. So recently we've made some improvements to the way imports can be done, specifically focusing around whole life. You used to have to save it as a CSV file or a comma delimited file. But now you can actually take any sort of spreadsheet file and actually bring it in there. So I really want to highlight that. Of course, all the other methods still work. So if you're comfortable doing, the copy and paste, that's still available. It just makes it a little bit easier to bring in whole life from a complete spreadsheet. So we're going to show that. The second one, we're going to focus on a concept of a term rewrite versus permanent. And this is a great concept for either stubborn clients or sometimes it can be really well paired with a buy term invested difference for sometimes corporate clients or people who think they're going to take that premium deposit difference from the permanent plan and invest it over time. Now, what this metric hopes to show is, one, how easy it is to show that at some point as those kind of renewals come, we're either not going to be able to purchase insurance, or that because of even just the age increasing and the cost of term insurance as we age, that there may not be that much leftover deposit difference to exceed the cash value. So we'll explore some of that. I want to show the third topic is sort of how to merge and split clients within LBA. So again, there is a little bit of a CRM component of our software where you can manage those clients and their enforced policies. Sometimes what happens is through either creating clients on our own or importing clients, we get multiples. And it's been something we've kind of worked on over the years here. But we've got the ability to merge and split clients. So I just want to show everyone how that works. We're going to set up a neat example of a buy-sell case. And again, this is a great opportunity to use something like our combined plan button. And also going to focus on a little bit of a custom node of how to set up this case. This actually makes kind of a nice persona case as well. So again, we might think about even adding this one as a favorite case, so that if we do want to go, if we find ourselves in this sort of situation, we have one that we can bring up all the time. And then we're going to do some kind of housekeeping. So things like the age comparison in our software. So again, picking a time frame that fits our client's horizon. We've kind of improved the software a little bit, so it's a little bit smarter about that, the age of product. So I'll show that. We've added a few more notifications for things like term opportunities. So again, just things like, you're going to get more opportunities, notifications on the 3 months to that term policy, the 1 year, as well as 2 years, in addition to all the notifications that are in there. And then a couple other features that I'd like to show. One is, we've heard a lot about multi-policies, and we're just basically showing a way that we can actually use our combined plans. We've added the ability to discount and really combine those to kind of reflect the price savings of buying 2 individual policies at the same time. So this is often comes up, husband and wife buy a policy, their individual coverage. However, we want to reflect that multi-policy discount. And the last one that we just kind of want to highlight is the save term policy to file. So that's kind of one of the other updates I'm going to cover today. And then I've got a surprise for the end of the webinar that I'm going to show of a new feature that's coming out hopefully very soon. I'm thinking it's going to be in the next couple of weeks, but without further ado, let's get started on this month's webinar. Again, if you're not familiar with our system and this is the first time viewing it, do create an account. All accounts come with a 30-day free trial, so do sign up for free. There's no credit card on sign up, so it's not as if there's any risk of us charging you. We want you to try it and find out how great it is for yourself. So the first case I'm going to set up, I'm going to do a whole life versus overfunded UL. I'm going to say let's create a new case. And again, if you're not familiar with the system, again, you can create any client very easily just by saying new client, entering the basic information. So first name, last name. You can enter their birthday. You don't have to. You can also use our age override and a gender. And then you're all set to go. Now I'm going to go off my sample case. I try and use my sample case for all my demos just to not kind of muck up my account here. My sample case happens to be this 50-year-old male, but really the first concept that we want to focus on is, this importing of whole life. So again, I wanted to show the improvements of an XLS import. If you're familiar with the system, You're probably familiar with the copy-paste or saving as a CSV. I'm going to focus on Sun Life for my first example. So what I'm going to do here is I'm actually going to say I want to add a universal life, and I'm going to pick Sun Life UL for the spreadsheet. Now again, those not familiar, you can of course search rates, but when you want to be a little bit more specific about your quote, things like term riders or specifying a deposit or even alternate rates, like what's your primary rate, what's your alternate rate. That's where we get into sort of the spreadsheet. I mean, it really is unequaled in the power of information that comes through those spreadsheets. It really gives us a truly accurate quote for all different scenarios. So I'm going to say let's add a Sun Life UL spreadsheet here. Now you can see I'm actually using the Sun Life web-based software for this particular one, and I actually really like their software here, being that it is web-based because you can access it on a Mac, on a PC. You can see I've got the PAR Protector up in my first tab here for a 50-year-old male, and I've kind of gone ahead just for brevity because really I want to focus on the import, not so much how to design quotes in Sun Life. And in the other tab here, I've got a Sun Life Universal too. And so that's the first one that I added. Now, remember, you can design anything that you'd like for these quotes. So I've specifically gone ahead and I've actually set the deposit period or the deposit amount for $40,000. And you can see I've planned it out for years 1 to 20. So remember that you can design these quotes to whatever you feel your clients need, or even if adding things like term riders, and that's kind of the power of the spreadsheet in there. So you can see I've designed my quote 50-year-old male here, and I've specifically put a $40,000 deposit. And the reason I've done that is I'm going to match that with the whole life, just to make our case a little bit more interesting while focusing on how to import. Now, regardless of what software you're using, they all have a spreadsheet function. And Sun Life is in this secondary tab here. So again, once you design your plan and get the kind of the specifications exactly as you want, again, I funded this one, as you can see. I'm going to go down just to show that I funded it pretty aggressively. I've also given it what I would consider a pretty aggressive interest rate at 5%. So again, feel free to manipulate these. That's kind of that's what I mean by the power of being able to control it. I've set my alternate interest rate again at something aggressive, but I wanted this one to be specifically an aggressive interest rate to compete with that whole life. And the reason I'm doing that is I want them to be close. But again, once you design your quote here, again, click View the Spreadsheet. And it's going to take you into this new tab. Again, it shows you all kind of the data about this plan. And again, they give us oodles and oodles of information, which is fantastic. I mean, if I go through the spreadsheet, you can see there's tons of information. The nice thing about our software, though, is that you don't have to worry about all this, clipping columns. If you're doing this in Excel manually, stop doing that. You're wasting your time. You could be out there prospecting. All we have to do is go up into this little button here called Export to Excel. And when we click this, what you're going to see is it does a little reload, but you can see it's actually saved this to your downloads folder. Generally, it's the default. Sometimes you can have a different location, but generally it'll be your downloads folder. And again, what I'm going to do is I'm just going to go Show in Folder, and I'm just going to pull this into the screen. So again, you can see this is the file that we saved here. And I'm actually just for myself here, I'm going to rename that this is the UL, just to keep this organized. Now, as far as importing it into LDA, there's quite a few different ways. Again, if you're familiar with the software, you can copy and paste. We're using this import spreadsheet file, and before you'll notice it would have said import as CSV. Now we can just say import spreadsheet file. You can see there is a box where it says you can either click here, and that's going to launch one of those file browsers, or again, we can drag and drop. And just to show, I renamed that one UL. All I have to do is grab that file that we just downloaded and drag it right in. And again, you can see it's automatically going to upload. Give it a second. It's going to give you a message if you've completed it successfully. But what you'll see is that when it goes in there, all that information from the spreadsheet, every single one of those columns has come into this plan design. So again, I can click Generate. It will compare and produce all those unique charts. Now, the other one that I was going to do is I was going to practice this with a whole life as well. So I'm going to say, again, plus whole life. I'm going to pick Sun Life whole life again. And all I want to do is basically save their spreadsheet. So what we're going to see here is that it's going to add the plan to our design case. When you see the blue buttons, this means it's looking for a little bit more information. You can see it says, please import from the illustration software. Again, if you forget what I'm doing here, this is your first time seeing it, there is a nice little handy video. It uses the old software video in this one, but we'll make an update for that soon. And again, I can hit import spreadsheet. Now, what I'm going to do here first is I've got to save my PAR Protector. And again, I've done sort of the same quote. You can see I've matched this dollar for dollar. So I've specifically said that I want $40,000 in each plan. I've specifically made this one a 20-pay, and I'm using paid-up additions. But again, as I said, feel free to get creative. You know, layer these plans, add term riders, ADO, whatever you feel suits your client. At the end of the day, the process is the same. Once you've got your quote the way when you've designed it the way you want, you say, I want to view the spreadsheet, and you'll just click one button to export to Excel. And again, you can see it saved the secondary file there. Now, you don't have to rename. I'm just kind of doing it for myself because I'm going to reuse these later on in another kind of comparison or case. So I'm just renaming this from Whole Life. And again, I'm going to come back here up at the top to Life Design Analysis. Now, in the one view I showed you, I was just dragging and dropping it from the one box to the other. You don't necessarily have to do that either. Again, if you're on kind of a smaller device or something like that, or you have a single screen, you can also say click here, and you'll see it brings up this same sort of file browser. And again, if I just go to my downloads folder where it was saved, all I have to do is select Whole Life, click open, and again, you're going to see it automatically starts the upload. So a little bit of an improvement over the old one where essentially, you had to save it as a CSV. So some files, when they come directly as an XLS, and some, like, that's why I picked them, they come right as an XLS. Now, of course, this still works with other insurance companies too. So sometimes you'll export to Excel, and you can use the copy and paste from there. But again, instead of saving as a CSV, just save the file as its native spreadsheet file, and now all of those products will come directly into LDA. Now, the other thing you can see is I've added 2 permanent products, and again, one of those updates that I was talking about is that the Analyze Age is now smart about what products you're adding, and will actually adjust itself to that time of the case. So that's really nice. Now, before I generate this quote, really, I just want to make sure I've got my kind of particular metrics. So again, whenever I'm doing multiple Whole Life, I really like to look at these overlay charts. We're going to pretend this one's a corporate ownership, and I'm going to say let's look at the credit to the CDA. But let's just take a look at the report that we created and see how that goes. And again, hopefully those of you who are using the system can see how much easier it is to bring in a Whole Life quote. And again, that's going to work with any different carrier out there, whether it be UL or Whole Life. And again, you can see when I generate my report, again, we're going to see my nice mission statement. This client of mine actually had a needs analysis attached to it. It's one of the report components I've selected. And again, feel free to leverage the different needs analysis tools in the system. Again, you can see anything that I designed in that spreadsheet has actually come into the plan without me really having to do anything. In an actual case to a client, I'd probably rename these to give more detail about what they are. But again, you can see kind of the unique insurance benefits. It's automatically picked up the pay period. And of course, I've matched these dollar for dollar, so they're both funded at $40,000 a year for 20 years. Now, when we look at some of our other charts, again, in an actual case, this is where I'd probably look at it and go, this chart maybe is not as compelling on a matched dollar. What you can see is actually they're tucked right in behind each other. So one's right over top because they have the exact same funding. As such, they're going to have the same sum of premiums. So again, it's tucked right behind there. We're going to see both these plans. We put $40,000 into both of them for 20 years, and at the end of the day, we end up putting up $800,000 into the plan. Now, the next one I've used is a really great metric whenever you're doing 2 plans together, overlaying the cash together. So you can see the Whole Life here is in blue versus the UL there in green. And again, the Whole Life, really has performed very well. Not surprising given the current dividend of the Sun Life product. Again, the UL I funded at a pretty aggressive 5%. But we can also take a look at things like, reduced examples. So again, I can take out these, and I'm going to go, total cash value of the Sun Life Whole Life versus, the alternate example. And this was, again, funded at 3% here for our alternate example. So again, a neat way to kind of show your clients the differences here. Of course, the one advantage of that nice UL is that we can always put in the minimum fund versus having to pay that pure Whole Life. Now, on the insurance benefit side of things, again, we can see actually the UL has, in green here, has a little bit higher insurance benefit up until about year 81. So that's where they kind of level out, and then the Whole Life actually takes off after that. And I also included a nice credit to the CDA. I think this is, again, one of those comparisons that comes up a lot for corporate business owners, and a credit to the CDA, again, just showing, in those later years that the Whole Life is a little bit stronger. And of course, we can always bring in reduced examples for these. Of course, our software is just calculating here the total insurance benefit minus the ACV. And again, it's taking all of that information from that spreadsheet, and that's how we're able to derive some of these metrics. So again, that's why I always say the spreadsheet is really great. I know it's kind of a little bit of an extra step sometimes when you just want to have these things automated, but again, we are working towards that. Again, next presentation summary is just going to show that, you know what, there's no premium deposit difference. We funded these exactly the same. So again, really what we're looking at here is just a sum of premiums or cost of one plan versus cost of the other. And again, a lot of cases, again, with their different product comparisons, we're going to see a different premium difference. Again, most times highlighting, you know, really the impact of permanent insurance. You know, insurance is one of those things, again, you know, we don't need it when we pay for it, and then as soon as we need it, we can't pay for it because of the price. So a lot of times it's just helping show our clients really how these products play out over time. Again, we're also going to see a little bit of a difference. So you can see actually the UL is up in cash value for the first 10 years here. And then after that, you can see that the whole life has a lot more cash value in it. So all it's doing here in this kind of presentation summary is giving the cash value of the universal life here overfunded versus the whole life and the difference. Again, we want to make it really easy for our consumers to see the differences in these plans. So we basically have to spell it out in black and white for them. And again, this is also making it easy for you. I don't know how many hours I used to spend in Excel trying to do this for the advisors that I worked with. And again, you're constantly doing these comparisons. It's nice to have it automatically done. Again, insurance benefit versus insurance benefit. And again, in this case, we can actually see that the whole life here up until that age 80 is actually down 41,000. First year it was actually up, but every other year there basically down a little bit. And then right around life expectancy, it actually increases quite a bit here. You can see it's up by almost $250,000. But again, a great way to sort of put these different plans in. Now again, I've also included an alternate investment. These are sort of more I would call objection metrics. I won't really cover and spend too much time on some of the other metrics, but just so that anyone listening knows that they are available, certainly that you can use them. So again, hopefully that kind of shows a little bit more around how you can import whole life and use just a native spreadsheet file that comes out of the insurance carrier software. So again, we'll see that as we do some other concepts as well in our cases here. So without further ado, I'm going to go on to the next concept, which is a term rewrite versus permanent. And a lot of times when we do, so I'm going to set up a new case here, and again, I'm just going to say I'm setting up my sample client here. So I'll work off this 50-year-old male again. Really, again, just to kind of show, I'm using the same client here, but I can make as many different cases. So that's sort of where everything in LDA is based off a client, but you might make multiple different scenarios for the same client. So you can make as many of these different cases as you'd like in the system. Now, this term rewrite versus permanent, again, is really more of maybe a strategy for a stubborn client or a client who really doesn't see the value of permanent insurance maybe immediately. Again, a lot of people make assumptions about their health. I mean, we always think, I think the natural tendency is to think we are going to be healthy forever. And again, it's one of those things where insurance is really tough to get when you do need it. So again, really highlighting that it's best to buy now. As I mentioned in the intro, I think this kind of metric really goes well with a buy term invested difference for, because sometimes it's the client's, CA, nothing against CAs here, but sometimes they don't necessarily understand the pricing of insurance or sometimes the cash value behind it, and they might recommend investing that money differently. So what I'm going to do here is I'm just basically going to set up a term rewrite versus permanent. So as everyone knows, again, I like $1 million here, so I'll focus on this. This really works with any sort of face value, though. I like to just keep something fairly generic, not too crazy, not too low to try and appeal to everyone. Now, as everyone knows, in the system, you can search the market for rates. And again, this is provided by our LifeGuide integration. And again, if you're using LifeGuide new to the system or old, you can use that serial number in LifeGuide as your 50% discount. But again, any package that signs up to our software is going to have access to these rates, whether or not you have LifeGuide. So what I've done here is basically I've just hit a term search. And again, this metric, this term rewrite one that I'm going to show you here, this works with any length of term. It also works with things like CI. So again, use this concept with CI. The only thing I'd caution with CI is really stress how hard it is to get underwritten in the future years. So what I'm going to do here, though, I'm just going to start with a term 10 here and hit search. And of course, it's going to do the survey of all the different companies on the market, whether you put in your preferred set or the total set. And you could, of course, go down the list here, pick anyone that you'd like. Now, sometimes when I do these term to permanent conversion kind of conversations where I compare, the guaranteed renewals that happen each year, I get the objection, you know what, that's great, and that's what's guaranteed in the contract. However, my client may elect to repurchase at an increased age. So again, my client here is 50. The chances of them being able to repurchase this term 10 at age 60, they may get rated, but there's probably a strong chance that they would still get an offer. Now, when I click Add to Case, as you probably know, it will add all those guaranteed renewals. One of the new things that you'll see, though, in the system with the Premier package is that there is this little split button here right on the right. So if you can see, there's kind of this button, it's kind of split in two. And if you click Add to Case as you normally have, it adds all those guaranteed renewals. But if you notice, if you click on this drop down in the side here, we can see there's two new options. Now, one is an Add to Cases reissue, and one is the other Add to Reissue and stop on the guaranteed renewal. Now, what this is going to do is it's basically going to make the assumption that your client is healthy. Again, they're taking a risk in that element, so we're going to disclaimer that in there. And it's also assuming that the pricing is going to stay the same. So again, there's two pretty big pricing. I'd say the health risk changing on your client is really the biggest assumption they're making, but that's okay. Again, this is more of an objection metric or showing kind of even a best case scenario. Again, just to briefly go over this one, at some point on that reissue, there is going to be a guaranteed amount of insurance on that renewal. So, for example, with Canada Life, on this particular one, which I'm going to illustrate, after I think it's age 70, and again, we'll kind of walk through this in short strokes as well, they're going to say, no, you're too old, you cannot purchase insurance anymore, you're above the maximum issue age, and in which case you'd still have the option to take the guaranteed renewal. The other option is stop there. So as soon as it hits a guaranteed renewal, we're going to lapse the coverage and say we're never going to take a guaranteed renewal. If we get too old, that's fine. You know what? We're just going to lapse the coverage. And again, that's more for that CA who says, look, you're going to keep buying term until you don't have it, and that's the self-insured option. Now, I'm going to go with the first because I think, again, I really want to show them what happens to that renewal and if they do need something permanent. So I'm going to say add it to the cases or reissue here. And it takes a second longer than the average. So again, pay attention to the top left. It's just working away. Again, it has a little bit more work to do in this because essentially what this metric is doing is searching at age 50, adding the rate, researching at age 60, again, assuming new meds, and then researching at 70 until it runs into that, that guaranteed rate, in which case it either lapses it or we've elected to actually keep it. Now, again, anyone, I'll go over this when we actually look at the case and compare it to something permanent. But what I wanted to show here is if I expand kind of the renewal schedule here, just by clicking this little caret button, you can see it's got, again, the current premium at the issue age. And then you can see instead of hitting the guaranteed renewal at year 11, it's actually gone out and said, okay, look, what if they reapplied, and let's add this as a new rate here. And so what I wanted to show you, I'm just going to pull up the Canada Life software to just really illustrate what this has done automatically. So you can see the initial premium here for $1 million was $1,570. And again, I know Canada Life's got a little small text, so hopefully you guys can see that over, sort of the screen share here. So you can see $1,570 is the actual rate. Now, if they were to take the guaranteed renewal, it would go up to $11,830. But again, in this scenario, we're doing it as a rewrite, so they're giving new meds. So basically what our software is doing is basically saying, okay, well, let's look at it at age 60 as if they reapplied. And so you can see this renewal premium that they've got matches as if they've repurchased, again, assuming new evidence of health and that the pricing has stayed relatively the same. Now, term pricing has gone down a little bit, but the biggest assumption I would say is the meds. Now, again, you can see if they get to 70, it will recheck again. And again, this client at 70, if I redo this, again, $15,000 is the premium, and so it hits there. But you can see, and again, this one's good till 85. You can see that guaranteed renewal at 92,080, which is exactly what we have there. Because if I try and reapply at age 80, I'm too old. And so this metric that we've created basically automates that. So you don't really have to think about it, but just know that it's actually going every single 10 years, and it's basically repurchasing that insurance. Now again, I'm going to compare this in my example. I was going to do it to a whole life, and as I said, I named those files before with whole life in the intent of using them again. So in the sake of time, what I'm going to do here is I'm just going to say, let's add a Sun Life whole life and compare it to this term plan here. So again, I'm going to use that import spreadsheet file. one of the advantages, again, of saving them is that if I ever need it again, all I have to do is select it. And sorry, Ken, I know that was fast. Again, I want to show that in these plans here, you can change certain things about them. So again, I've given it a reissue. What I do want to show is that when I do click edit, it automatically adds this disclaimer for you, showing that, again, this assumes good health and current pricing. So again, it's really important to disclaimer the fact that, again, we're taking some risk here. Again, and this is a Sun Life Whole Life. Now, the other thing I want to do here is I'm just going to go into this Whole Life plan because, as I said, I think this metric works really well with a by-term invested difference. So again, even if we do remain healthy and keep purchasing the insurance, what would it be like if we invested the difference of, this repurchase versus a whole life? So to use our by-term invested difference, again, all I have to do is go into my plan here with cash value and hit edit plan. And at the bottom, you can see I can select the invested difference plan. Now, I only have one in there. I just have this reissued term, so I'm going to save that as my one. But again, if you had multiple term products in there, feel free to use those. Again, you can basically populate that data with any other term product or even a UL product that has been added to it. So again, I'm just going to save that. Now, again, you can see I've got my term 10 versus whole life. It's automatically adjusted the age there. The only thing I want to do is I want to make sure here in my controls that I've actually set what the by-term invested difference rate would be. So again, I want to give something nice. I mean, this would be, and we're using, again, it's important to know that we use a net rate, so net of tax. So again, assuming my client's in the highest tax bracket, they basically have to make 6% of the market to net this 3 out. The only other thing I want to do is I want to make sure that I just have that by-term invested difference chart selected. So again, I have the chart. I'll leave the table in there. I'm going to take out some of these other metrics just to kind of clean this up a little bit, and we will generate. And let's take a look at how this case sort of plays out. And again, I think this is a really good one, especially when you see that end renewal. Even if we focus on sort of that lapse period of when they might lapse the coverage and say, look, I'm not taking the guaranteed renewal. I still think it's a really great concept to show, really what happens over time, again, especially taking all this risk, and that's really the big thing. So again, I'm just going to kind of blow by our mission statement. If you're not familiar with our system, these are our report pages that you can actually customize. So again, you can put your own sort of disclaimer in there. You can add even individual pages as well into these sort of reports. Again, we're going to see our reissue schedule here. So again, our guaranteed renewals, this is just basically a premium schedule page. And again, we've got our big disclaimer in there just showing that this is a reissue. Again, feel free to kind of make other notes and add even more detail about the risk that they're adding versus our 20 pay here. So again, really just seeing that schedule here. And even knowing that this whole life, we actually put in a little bit more deposit. But I think the big thing here is this visual. So again, when we look at this whole life premium, yes, it's definitely a healthy premium. Again, it's a 20 pay, so it guarantees to end at 20 years. And again, if they bought this term, again, they take all this risk. They've got to be healthy all the way along here until this, age 80 here, where they actually get that last guaranteed renewal all the way until the end. And so again, really later on when we look at kind of the premium deposit difference for this cash value here, I'm really going to focus on that 30-year mark because again, they have a choice there whether to lapse it and have no more insurance at age 80. I think the stat out there too is that 50% of people are now living longer than age 85. Now in this one, again, there is definitely a big price difference. And we could have made the whole life a little bit more competitive, but that's fine because I wanted to show, really investing the difference versus the cash value in the plan here. So again, it's okay that, it may not be the same cost comparison because it's taking so much risk. And again, there's no cash in that term plan versus at year 30 here, again, was kind of that mark that I really wanted to focus on at 1.8 million. And again, for those of you watching for the first time, this is, again, a very powerful chart, just basically showing the par product, in this case, the whole life, or any really cash value product you add. Consumers really want to see what they've deposited here in red versus what they get back in green. And again, just to really highlight really quickly, all the guarantees from those spreadsheets come in, as well as the reduced examples. And again, you can kind of toggle between which reduced example you'd like. But again, really powerful, even in the reduced example, to show that really powerful visual of, guess what, there's more cash in this product than what we've paid. And again, that's very powerful at showing not just cost, but value of the product. Again, down to our insurance benefit, for those of you not familiar, just showing this one in particular as a paid-up edition here. And again, I can show that, growing over time. I can also show the guaranteed face amount, or more likely what a reduced example would do. So again, same sort of possibilities there. But again, when we look down at our presentation summary, again, we're going to see that, again, focusing on this year 30, so I'll expand this as well. At the end of the day, there'd be a, at life expectancy, let's call it age 84, there would be a $216,000 difference between the two plans. Now, if we focus on that 30-year mark, there's going to be a basically a almost $600,000 difference, $584,000 difference between the two plans. And what we want to do is we want to really look at that and say, 216, what's the cash value difference in the plans? And again, that's where we can see here at year 34. I'll expand this here. At year 34, we have $2.2 million of cash value in that policy for the difference of $216,000. So again, really powerful use of those funds. Again, insurance benefit definitely different. There's about a $1.6 million difference in the insurance benefit at those two times. But again, it's really about, why do we pay that difference and what do we get for it? So again, I really like the, the cash value difference here showing that. Now, I've got an alternate investment in this one, but I also wanted to show the invested difference. And again, this was at a net 3% rate. Feel free to get more aggressive with this as you see fit. I don't know how much more aggressive I would get with that. Now, what you can see is, again, if we're investing the difference, we definitely have more cash value than that par plan up until about that 20th year where, again, we're seeing some of these on the 10-year marks. You'll see the charts kind of readjust a little bit. That's because we're hitting that renewal. And again, we're having to pay that out, so it gives us less money to invest with. Again, at year 30, we see that big mark come down. Again, if we had picked the other option of lapsing the coverage there, we'd probably see a much tighter chart. Again, I still think it would favor that whole life. Again, that has performed extremely strong. But again, it really emphasizes that if you think you're going to invest the difference in there, even your age, if you keep buying term over time and keep remaining healthy and taking all that risk, it may not be the best option for you. And again, even if I funded this more aggressively, and lapse the coverage, again, we're making compromise all over the place to get a similar return, but less insurance. Again, let's not forget that when we look at the insurance benefits of the two, and I'm just going to get rid of cash here, that there was a huge difference in insurance as well, which is something that they likely needed anyway. So again, really powerful concept of this rewrite versus by term invest the difference. So again, that is a Premier only package, but hopefully that helps in sort of what I call our stubborn client cases, or it doesn't even have to be a stubborn client. We shouldn't pick on our clients too much, but sometimes they do need a little push to see the value of certain products, especially life insurance products. So that's sort of our term rewrite. So again, feel free to use that one in your presentations, and I hope it helps in kind of convincing clients of the value of some of these permanent products. Now, the other one is I've just got on the agenda here is how to merge and split clients. So my account's a good example of that. I do a lot of imports and I do a lot of testing on my accounts, and as a result, sometimes you can say I've got a lot of funky names in here. Sometimes I do have multiple clients in there with the same name, because I have created them over and over and over again. And this Cherise here is a great example. Again, I often use just you can see how many times I've done that and put that client in there. Now, let's just bring up one of Cherise here. And again, I'm going to say view. Sometimes you might find that you get a couple different clients with the same name, or for whatever reason you create a client again when you've already imported them and you could have used them, or two of them got imported and combined together and you want to split them apart. Well, now when you go into the actual client file here, and again, this is sort of more of that CRM piece where, again, you've got all this client information from the import from the carrier. We can say, do we want to merge these clients together? Do we want to split them apart? And again, in my case, I'm going to do a merge because I've got two of Cherise here. So all I have to do is click merge client. So again, if you find yourself with duplicates. Now, when I click merge, it's going to give me some suggestions. It automatically fills in the name to help me find which clients might be duplicates. And in my case, I've got a lot, so I might have to go through and merge a few of these. I'm just going to say, let's merge it with this top one. And basically what it's doing is it's got on here, you can see I'm merging all this into the master record. So client 1 on the left-hand side, client 2 on the right-hand side, and again, mine are identical because they've come from the same import. But again, it's just basically saying this is the same person. What information do we want to use as the master in the middle? And you can see I can take the name from the right and move it into the middle, or I can take the name from the left and move it into the middle. And sometimes you're going to have more or less information on one or the other client. Neither of these have a company name. Of course, I could always add that. I could say, you know, Series with an LBA here. I could say, you know, this is the birth date I want to go with. You know, we're going to select a gender. We didn't have it in either of them. And again, I can go through the list and say, you know, take this information, and basically go through and cherry pick all of my best information here. Now, the other thing you can do as well is I might say, look, if they are the same, I'm just going to take all of it from one client and just say that's the master record and copy all from the right or copy all from the left. So hopefully that makes, you know, a little bit easier if you do find yourself getting multiple clients or you've accidentally created another client and put them together. So again, I can basically take whichever fields I like, and again, I'm just going to say that LBA. And at the very end, I'm just going to save it. And again, this is going to merge those two clients into one. And again, you'll get that nice success message saying, okay, great, we've merged them together. So the next concept that I want to kind of go over is another neat one. And again, I'm going to set up a new case here. And I'm actually just going to do a new client here. So I'm going to say, you know, client one is John Doe. And I won't give him a birthday. I'm going to use our manual age override for this quite a bit. Though I'll pretend both of my business owners here are males, and I'll hit save. And this is our buy-sell case example. So I just wanted to show really how you can set this up and present these to business owners as sort of a single option to really help simplify the whole process of what is a buy-sell and how can we kind of present it in a better way to our clients here. So again, I've just kind of set up a new case. I've got John Doe. And what I might actually want to do is edit this even and put the company name, because in my scenario here, I'm assuming corporate ownership. Now, what I'm going to do is I've got two clients here. I've got, we'll say we've got John here and Jim as my two clients. And, you know, maybe between the two of them, they each need about, you know, call it $1 million in insurance, total $2 million for the business. And we're going to do a crisscross buy-sell example here. So, you know, in this example, I'm going to show them, you know, they could buy the term insurance, but they might want to compare it to UL insurance. Again, I'm picking fairly younger business owners. A lot of times business owners are very short term. It might even be a T10 versus T20 for a buy-sell. You know, I think business owners, what I see, because they think, you know, 10 years and out, and they'll sell the business, and then they get so attached to it that they stay forever. And then, you know, the 10-year term turns into, well, I should have really got 20-year term, or, you know what, I really need whole life insurance. So again, any sort of combination of your usual compares that you think are relevant for your clients are good, but I'm basically going to set up a buy-sell. So what I'm going to do is I'm going to take client one here, and actually before I even start this, I'm just going to say, you know, I'm just going to call this buy-sell XYZ Corp. And that way I'm not even focusing on, you know, again, I can put the company name right there, so I'm not even focusing on, you know, really anything at all as far as, you know, the name of one client. We're just optically, we're going to say this is our buy-sell example. Now, the first thing I'm going to do is I'm going to say, you know, we each need $1 million, so I'm going to say, put in our $1 million insurance benefit. As you can see, I did not give our client a birthday year because we're actually going to be working with two clients and then combining them together. And so what I'm going to do is I'm going to say the first client of ours, Jim here, he is 38. So I'm going to do this. And basically what I'm going to do is I'm going to say we want to search the market for term. And I'm just going to select some term 10 to go with this. So again, we're going to start with term 10. Again, as I said, any of your, you know, your usual comparisons would go well there. Again, go down the list, pick any one you want. You know, again, we're showing different rates here. I'm going to go up near the top of the list and say, you know what, let's add Equitable Life. And I'm adding it in this case with the guaranteed renewals. Again, as you know, you might add it with a reissue. And again, assume that this is a younger guy. And, you know, he may be able to purchase insurance at age 48. I'm not going to do that in this case, but let's keep it simple here. Now, the other thing, just to keep track of these things as we go is, you know, because I'm going to be kind of manipulating and adding two clients to one product type, I'm just going to edit the name. So in this case, again, just to keep my own self straight, before I add the next product, I'm just going to say, this is Jim. And so this is Jim's insurance on John. Right? So one partner is going to buy for the other, and I'm going to save that. And again, these are just notes to make it easier for me, and again, hopefully make it easier for the client as well. Now, once this saves here, and again, it's going to save my custom note in there as well, I am going to say, okay, let's use this client age override here again. So you can see it's second down from insurance benefit. And again, a lot of times, instead of using it just as a generic birth, like generic age, you might find that there's an age nearest in place, so that's also an area you could use it. But I'm going to do it, basically what I'm going to do here is I'm going to change my client's age to 45. So this basically overrides any birth date that's set and says search for rates at this particular age. So we're going to say John, the other client, or the other business owner here is 45. Him and Jim are in partnership, and we're going to search for some term product for him. Now, again, one of the things that I think can confuse a lot, or not confuse, but maybe sometimes derail these kind of sales is that, you know, John is going to pay a lot more for insurance than Jim because of his age, and sometimes Jim thinks, well, why would I do that? But again, it's important to have that buy-sell funded with insurance so that one partner can buy out the other in the event of death. And again, I can see, you know, different survey. You might do different products, you know, from different companies across the way. Again, you may stick with the same company. Again, feel free to choose. I'm just going to pick Equitable Life again just to keep it really simple here and say add to the case. And again, I've added it just with the renewals there. And what I'm going to do here is I'm going to say, okay, let's edit this plan. This is John. And I'm going to say, on John to fund Jim by. So again, feel free to make better notes. You know, I'm notoriously bad for adding capitals in the middle of my sentences. I think it comes from coding. And I'll say save. Now, once we've got the one product for both clients in there, again, what we want to do is we've done the term search here. We can combine them. So what I'm going to do here is I'm going to say combine plans, and I've got John. Well, actually, I'm not going to combine John and Jim. Well, actually, I will. I'll combine them, and this is basically their term option. So again, I can combine those plans. So this is basically what combined plans, just for those of you not familiar, this is summing them together. So John plus Jim. So these are both their term options in there. And actually, once you've combined plans too, you can actually edit the notes too. So I'm going to say John plus Jim plus John, term plan, term option. And again, I'm going to save that. So I've got that kind of set there. And basically, I want to repeat the process. So I want to do the same thing again, but now I want to use whatever other product that I'm going to compare. So I'm just going to say here, we're going to go back and use our age override. So again, I can control whatever age. And I know I can still search John, but I'm going to flip back to Jim here. And I'm just going to use universal life. I think whole life might be a little tougher sell in this case. Maybe it's, you know, we want to show them cash value on the asset sheet if they are, you know, business owners who we think are a little bit wealthier or have excess capital, things like that. But again, I'm just doing here 38-year-old UL, and I'm just going to keep it minimum funded just because I'm watching that clock. Talking slow has its advantages, but also burns up all that time. So I'll just take Sun Life here and add it to the case. And again, because I did this at age 38, what we'll see here is that we're going to name this Jim here. And the only reason I named them before is that if we ever go back, again, when it combines them, it sums them together, but it also keeps the old versions, because again, we might make a mistake, and instead of going and doing all three again, we might want to just revert back. It's hard to see probably over a screen share. These are actually hidden in the report, so it combines them and hides the other two options. And again, what I'm going to do here is I'm going to change that age back to 45 and repeat that search for UL here. So again, this is John, who's the older two, at 45, in search here. All right. And again, let's keep it consistent. Let's put Sun Life on there. But again, feel free to mix these up. Again, might make it harder on the application side, but again, better for your client's pocket if there is a drastic difference in them. And again, just to repeat, we're going to use combined plans once again, and we're going to mix these two UL options together. And we will combine them into a single option. And again, what it's doing is it's going to sum the insurance benefits, and it's going to sum all the premiums. And again, this makes it really easy for the business to look over and say, look, what is our total outlay versus what is the total benefit? And then again, we can compare them. And just to clean it up here again, let me just edit this and just say this is Jim plus John, and then instead of term, I'm going to say this is our UL option, or universal life, or whatever you want to put there, and save that. Now, as far as presenting it, again, we're going to have to use some kind of either combination of their ages. I'm probably a fan of using the older client's age in these sort of scenarios. So in this, I'm going to keep the analyzed age at 45. Again, we know, Jim is 38, John's 45, so neither of them are exactly these age. We've got the premiums added though at their respective age, so as far as pricing is going to be right, we're basically just looking at the years forward. So I'm just going to go with the older client, again, so he can think in terms of, when he gets to age 85, or if this is out of the range of his lifetime, something to that effect. But again, let's generate the report and take a look at what it looks like here. And again, great way to, one other thing that I want to do here before I generate, I got a little bit ahead of myself here. I want to add a custom page. So this is, again, sometimes, as I talked about a little bit before, you want to make a persona for some of these policies. So once this generates, I'm actually just going to go back quickly. I might want to use our custom report note. So again, it's going to flip on me as soon as I get down here, but you can see there's internal notes. Those are just for you, but there's also these custom report notes. And I want to use this in a buy-sell case because, again, we want to really emphasize, some of the different ways that we can structure these buy-sells. So I've actually pulled up on the web here. I've got a secondary screen here. I've got a little blurb here on using buy-sell or using insurance to fund a buy-sell agreement. And again, I'm using the crisscross method here in my example. And again, I'm just going to flip back here. What I want to do here, just give me one moment, is I want to copy and paste the text from my other box here. So again, what I'm going to go down and do is I'm coming down to basically the report notes title area here, and I'm just going to take my piece, and again, you might have your own piece, or you might want to type it out. I guess a little bit lazy, so I'm going to say using term insurance to fund buy-sell agreements. I'm going to use that as my report note title, so that's going to be the actual page of report note. And then I'm going to put this crisscross method in here as the buy-sell funding method that I'm using. And again, feel free to set these up as favorite cases. Again, if you're looking at that, I know Ken, I know you're commenting on there too. I'm just using a copy paste. So I'm copying it from over here and pasting it in here. And that's, again, you can put any sort of text. You can also type these out. So, I mean, if I have something to add to that, I certainly can add that. And then the only other thing I would say is that I want to add this custom report note. This is really important here that we include that as a metric in this comparison. So again, I'm just going to put it in there. And again, feel free to customize whichever metrics you feel are applicable. And again, click Generate Report. But again, these report note titles can be really good, especially if you're using that case sharing type feature where you're putting this out on social media or something like that. So a report note can go a long way in actually explaining really the concept behind the comparison. So a lot of what we do is product comparison and kind of helping emphasize the value of certain products over another. Take it one step further and thinking about, how can we explain what it is that we're actually doing. It can be really helpful in actually, first of all, establishing the purpose and then going into, say, a product comparison and saying, here, again, each of these different examples, the Term 10 as well as the UL, both could be viable options for the funding, but first we need to know why we're doing it. So again, we'll just wait, and I'm just going to generate this report here. And again, this one's, because we've got so many different plans, it's going to take an extra second. So again, be patient with it. It's a lot of information to calculate at times. But we'll, again, generate this report. And again, feel free, as I said, to include any kind of different products. So again, we've got our nice title page. Again, for those of you not familiar with the system, ours is not going to show up there. You're going to import your own logo, so it's all advisor branded. And you can see this one's prepared for what I set our client up as buy-sell XYZ Corp. It could be prepared for the corp name. It could be the business owners. You guys customize that. As you'll see, I've got my customizable mission statement here that comes from my account, but what I really wanted to draw attention to was my custom note here, which talks about the concept we're doing. And again, this might be something you could post out on social media about buy-sell, so it could be even more general about different methods to do it, corporate ownership, corporate notes, things like that. But let's just focus on this one here. Each shareholder purchases life insurance policy on the other shareholder and names himself or herself as the beneficiary. Subsequently, the shareholder and company complete a buy-sell agreement. And again, in this scenario, I'm just saying, look, this is the company funding them, and here are our two options. So again, you can have your nice note here. You may even want to have a sign-off page on there. But again, we're going to go down to this great premium schedule here. And again, instead of focusing on, oh, Jim's premium is higher than John's premium or vice versa, we're actually just going to say, look, the business is going to pay this, and as you'll note, these are the combination of both of those individuals' premiums. Again, we're going to go through versus the UL, and same sort of thing is going to happen. Now, we started from the older client, so what we're going to see here is when the one client's 84, we're going to see that premium drop. Again, if we had gone by the younger client, we'd see the price drop, we'd see a couple more renewals. But again, the whole point that we want them to think about is, this older gentleman and what happens with the business. Are you still going to own it at a certain point? And, why one product might fit the other one better. And again, feel free to customize these with different options. Jim and John may say, hey, look, I'm going to retire by that age. Jim being the younger guy, he's only going to be 75. But again, if it's something like a whole life plan, we could certainly do it. But that's, kind of a way you can use that combined plans to really put together a buy-sell that's a lot simpler that shows a couple different options. Again, this could be term 10 versus term 20. That's also a great comparison. Can be done the same way. And again, we're going to see some charts here. These ones have no cash value. We will see that funding go for the insurance benefit versus that UL option. Again, just knowing that it's going to be around there. So that's kind of my buy-sell example. And really that leaves me my last 10 minutes to talk about some of the updates to the software. I mentioned some of them. The only other one that I really wanted to mention here, I'm actually going to set up a new case for this. So I'm just going to say this is sample case and continue here. So a lot of people have been asking, can you get combined life? And actually our combined plans often gets mistaken as combined life. But what I'm going to do here is, and again, this is going to be kind of really quickly here. I'm just going to say I'm going to do a term search for 500,000 for a male, term 10, and let's add London Life here. Perfect. Base premium, and I might say, for a combined life, I might say, okay, we have a male and a female. What I can actually do is I can actually edit this client just for a second to make them a female here and save them. And what I'm going to do is I'm going to combine them as if husband and wife are buying, both the term 10, but I want to reflect the multi-policy discount in there. So again, I'm just going to repeat the search here. Again, now being a female, feel free to manipulate the age. I'm just trying to do this, kind of quickly to show the concept. So again, we'll do male and female, both 500,000, both individual policies. Let's use Foresters here and add them to the case. They come out nicely on top. Now, again, as you just saw in my previous example, if I want to combine them and sum them, I can just click and combine them. But that's just going to sum them together. Now, when, as you are probably all aware, and I should have really done this with the same company. So actually, let's just pretend this is London Life. Let me just go and cancel that. I'm actually going to do it properly here and add it back. Okay, so got the female. I'm just going to go back here and add my male. And I want to keep it the same company just to keep it consistent because that's where the multi-policy discount will really actually come in. All right, so we can turn here. And instead of just doing the preferred, I'm just going to say, let's look for London Life. Perfect. Search for rates. Okay, great. And I will add that one to the case. So we have, we've searched for the right rates independently. So we've got husband and wife here. Now, if they purchase these policies together, they might get a multi-policy discount. So again, as I said, if we combine them, it's just going to sum them, but it's not going to reflect really the rate. And again, usually these are around $2 per month, so about $25 per year as the multi-policy discount. Again, individual coverage, but we want to show them combined as one option. But what's the total cost going to be of maybe the term versus the UL? Well, you can see, again, we're using the split button. So off to the right of the combined plans, you'll see this new little area here, multi-policy discount combined. So it's kind of a little bit different. If we just combine here, it's not going to do any discount. But if we do a multi-policy discount and say combine with multi-policy, again, we're going to see we can add each individual, and you'll see it'll say combine with discount. And again, I'll show you, I know some of you are going to say, well, they're not all $25, so I'll show you how you can also manipulate that. But that is a way that you can actually combine them to reflect a multi-policy discount. In this case, I've taken $25 off for the annual premium. Now, again, if you were going to say, well, maybe it's a larger increase than that, or maybe there's a promo on multi-policies or something like that. Again, within this combined plan, which again is husband and wife with a discount of $25, I can click the Edit Plan button. And again, you're going to see I can actually specify what I want my multi-policy discount rate to be. So again, for whatever reason, let's just say it's $50, I can make that discount $50. So again, you can take off whatever percentage of price you want there, and again, save it. So that's a nice little update to a multi-policy discount. that you can now, it should make it a little easier to present those without having to jump through so many hoops. Now, the other kind of update that I wanted to give here is a really neat one as well. A lot of times when you're entering a manual policy, it's for an existing client's term product. And, quite often that we want to, the idea is that we sell that every single time we present a term conversion in life design analysis. But, again, we might be doing policy reviews and the client may not be ready for whatever reason, something may be going on in their life and we want to review it with them next year. Or again, we just want to have it on their client file. So again, I don't know, again, if you're familiar with LDA, you'll know this very well, that you can review an existing Term 10, and you can always import from the client file too. So if I've done the import, I can bring in information from the client file. But this new update is specifically if we want to send it the other way. So again, we're reviewing a term policy, we set up a brand new case for this client, and then we actually enter that guaranteed renewal schedule. So I'm actually going to enter one here. I'm going to say they bought this a few years ago, so the initial premium was $1,090. Then I'm going to use the guaranteed renewal at $7,360, and I can actually enter this directly from that contract statement I have with them, $2,900 and $61,040. Again, I'm going to say this is renewable till age 85, convertible till 75, and again, I'm going to give it an issue date, and this is kind of the important part, is when you give it an issue date in our system, it will automatically calculate the number of years that have elapsed. So the point being that if I revisit this next year, again, knowing the issue date hasn't changed, but knowing today's date has, it will automatically adjust for that. Now, this is great, and again, when we set up a case, it's nice, but sometimes we want to save this information to the client file so we can use it again. And again, you'll see, I'm going to give this a policy number, really easy one. I'm just going to give it 111111. And I'm going to click this box at the bottom here. And this box at the bottom, and again, hopefully you can see that, is save as a policy. And when I check that and check save as a policy, what ends up happening is it saves that to the client file. So when I actually go and look at that client file, I have access to that in the future. And again, if I even set up a new case, for a sample client, I'll just go really quickly here. And I'll add a term 10. Again, we're starting from scratch. Then I can do the reverse, and I can import from that policy 111111. So I just saved that one. Again, when I click it, you're going to see that it brings in exactly that renewal schedule. So this should make it easier doing reviews year over year, or when you want to save back the other way. Now, we're getting to the last 3 minutes. So I'm going to show you a really neat feature that is not yet live in our system, but this is a little bit more of a teaser of what is to come. I'm going to close out of some of my tabs at the top here, and I'm going to open up a new tab. And again, what we're looking at here is more of our development server here. So this is features, we test them vigorously before they go live. But what I wanted to do here is I'm going to set up a new case, and this is a taste of what is to come fairly shortly. As soon as we're kind of really set with it, we'll release this. But this is coming soon to the Premier package. Now, what I'm going to do is I'm going to set the insurance benefit as $1 million. And you can see we've got all of our usual plus term, plus UL, plus whole life, plus critical, plus manual, and our combined plans with the split button. But what you're going to see very shortly if you're on the Premier is this plus recipe. And I know a lot of people have been waiting for this. I'm really, really excited to release it. With recipes, what I can do, and we're building these out, so again, we've got a few right now, but it should save you time. A lot of people say, well, when I do search, I want to add a couple different products. Well, we've heard your feedback, and we're happy to accommodate. So again, some of our most popular comparisons are Term 10 versus Term 20, Term 10, 20, 30, or even T10, 20, min-funded UL. You can see these ones are best rate. We're also going to have specific company. So maybe you know the company you want to just do a T10, 20, 30 with, and maybe it's Sun Life, maybe it's Canada, London. Again, these recipes should make it easier. I'm going to do a really simple one. I'm going to say, I just want to set up a T10 versus T20 versus a minimum funded UL for a, this 51-year-old male that I have here. I click one button, and I'm just going to say leave, and I'm going to throw in my insurance benefit. You're going to see, again, it brings us to a screen where we can actually pick our recipe. We can set our health risk, our payment schedule, all of that kind of thing. But again, I'm just going to say add recipe. Now, what the software is actually doing is it's searching not only the T10 and adding it, it's searching the best rate of the T20 and the best rate of the UL. And what you can see is I've got a smattering here of my best T10, best T20, and best UL at one click of a button. And I can generate that report. That is something that is coming very soon to the system live, and should make it a lot easier. And again, the whole goal is here to take notifications and say you have a policy opportunity, combine it with a recipe, and be able to turn out a case that automatically compares 3 products at the click of a button. Again, it should make you even more productive and even more effective at setting up these presentations. So that really concludes the webinar. I do see a couple questions coming through. One is, what does that combine or transfer client? This is really for us internally. This is something we're building out for an AGA and MGA model, whereas if I create this client and I want to transfer them to another LBA user, right now it's for super admins, I can transfer a case to any one of your accounts. We're trying to build it so your wholesalers can transfer cases to you and help out, or even peer groups can transfer amongst each other. It's something we're testing right now and building out, but it's another upcoming feature. So, hopefully you enjoyed the webinar. I'd love your feedback on some of the recipes and some of the new features, but again, really appreciate your time participating on our webinar. And, for those of you participating over March break, thanks so much, and get back to those kiddies. Anyway, thanks so much. Talk to everyone soon. Take care.